Welcome to Investify, where we dive deep into the most promising stocks of the market to help you make informed investment decisions. Today, we're zeroing in on a tech giant that's making waves in the semiconductor sector, Broadcom, or as it's listed, AVGO. So, grab your notebooks, because this is going to be an insightful journey into Broadcom's financial landscape. Let's start with Broadcom's current standing. This tech behemoth has recently climbed the ranks in our investment portfolio, now sitting proudly as the sixth largest holding. That's a significant vote of confidence from investors, signaling a bright future ahead. But what's driving this optimism? Well, one word: AI. Artificial intelligence is the frontier of tech innovation, and Broadcom is right there, leading the charge. Their involvement in AI is expected to drive their revenue growth into the double digits, particularly in their AI, networking, and custom compute businesses. This isn't just speculation. It's a trend that's shaping the future of technology as we know it. Financially, Broadcom's trading at 25 times forward estimates, a figure that's got analysts and investors alike sitting up and paying attention. Why? Because it's a clear indicator of the company's robust financial health and its promising future. And let's talk about the semiconductor sector as a whole. It's on a robust uptrend, further elevating Broadcom's position in the market. The past year, 2023, was a remarkable one for Broadcom. Picture this: their stock price soared from $550 to an astounding $1,200. That's a 120% increase. And there's more good news on the horizon. The target price is set at a whopping $1,500, suggesting a potential upside of 25%. Now, what makes Broadcom stand out? Their exposure to a variety of end markets is a huge strength. They're not just a player in the digital transformation game, they're a pivotal force. And their strategic agreements? They're with none other than the big tech titans, Apple, Google, and Meta. That's not just impressive, it's a testament to Broadcom's industry dominance. Let's talk numbers. Broadcom's financial resilience is nothing short of impressive. They boast over $14 billion in cash, alongside a trend of decreasing net debt. This isn't just about having a robust balance sheet, it's about being prepared for future growth and opportunities. And speaking of growth, Broadcom's acquisition of VMware is a game changer. It's expected to contribute significantly to their growth, with a margin expansion of a staggering 3,100 basis points over the next 2 years. This acquisition is not just a growth strategy, it's a clear signal of Broadcom's ambition and its commitment to remain at the forefront of tech innovation. Now, let's shift gears and talk about another titan in the semiconductor world: Applied Materials, known as AMAT. This company's performance and strategic positioning are something that every investor should be keenly aware of. Since the beginning of 2023, AMAT has shown a meteoric rise in its stock value. Starting the year at $100, it has surged to a remarkable $168. That's a 68% increase, signaling robust investor confidence and a strong market presence. But what's behind this impressive performance? Applied Materials stands tall as a leader in materials engineering solutions, specifically for wafer fabrication. This isn't just a niche market, it's the backbone of the semiconductor industry. And with the chip industry projected to hit $1 trillion valuation by 2030, AMAT's role becomes even more crucial. Over the last decade, Applied Materials has consistently outperformed market expectations. We're talking about a staggering 800% return, which is no small feat. This performance is grounded in their consistent revenue growth and an impressive earnings per share, EPS, track record. What gives AMAT its competitive edge? Two things stand out: a broad selection of manufacturing tools and their strong customer relationships. This combination is key in an industry where technology and trust go hand in hand. Another aspect of AMAT's business model worth noting is their subscription-based AGS, Applied Global Services. This service business isn't just about providing solutions. It's about generating recurring revenue, creating a stable financial base for the company. Now, let's talk valuation. Applied Materials' forward PE ratio is currently below the sector median. This is significant for investors because it indicates that the stock might be undervalued relative to its peers, potentially offering a lucrative opportunity for those looking to invest in the semiconductor sector. Before we continue, here's a question for you. What do you think drives the consistent success of companies like Applied Materials in such a dynamic industry? Share your thoughts in the comments below. And if you're finding this analysis helpful, don't forget to subscribe to Investify for more deep dives into the stock market. Continuing our exploration of the semiconductor sector, let's turn our focus to Analog Devices, known in the market as ADI. This company's journey and strategy in the stock market offer unique insights for potential investors. Currently, ADI's stock is trading around the $200 mark. It's an interesting figure, especially when you consider the company's target price is set at an ambitious $250. This suggests a substantial growth potential that savvy investors should be keen to monitor. ADI has carved out a leadership position in two critical areas of technology: energy storage and automotive electrification. These sectors are not just buzzwords. They're the future of how we consume energy and travel, making ADI's role pivotal in shaping these industries. Despite facing a general decline in revenue, ADI has outperformed expectations, particularly in the automotive and communications sectors. This is a testament to the company's resilience and strategic adaptability in a rapidly evolving market. ADI's potential for earnings growth is particularly noteworthy. They've managed to surpass revenue growth, thanks in part to a historical reduction in operating expenses. This kind of fiscal management is what often separates the good companies from the great ones. When it comes to valuation, ADI stands out with a forward PE ratio of 22 times for 2025. Additionally, they offer a dividend yield of 1.7%, making them an attractive proposition for income-focused investors. One of ADI's strengths lies in its diverse portfolio, particularly their focus on mixed signal and power portfolios. This diversity not only spreads risk, but also positions the company to capitalize on multiple growth areas within the semiconductor industry. ADI's fiscal strategy is noteworthy. They've reduced their capital expenditures, CapEx, and streamlined their operations. This cautious approach to spending and expansion signifies a commitment to long-term stability and fiscal prudence. As we wrap up our discussion, let's broaden our perspective to the semiconductor industry as a whole. This sector is not just growing, it's thriving, with significant expansion anticipated in 2024 and 2025. For investors, this presents a golden opportunity. The stocks we've highlighted today, Broadcom, Applied Materials, and Analog Devices, are prime examples of companies poised for potentially favorable returns in this burgeoning market. A key factor propelling the semiconductor industry is the rapid advancement in AI and digital transformation. These technologies are not just shaping the future, they're redefining how businesses operate across various sectors. Companies that are at the forefront of these trends are likely to outperform and provide substantial returns to their investors. Another critical aspect that sets successful companies apart in the semiconductor industry is their focus on operational excellence and financial strategies. Quality, customer value, and strategic acquisitions are the pillars supporting their growth. It's this blend of innovation, customer-centric approach, and strategic expansion that forms the backbone of their success. Lastly, let's talk about the market trends that are shaping the industry. Growth is being driven by several key areas: cloud computing, AI, IoT, Internet of Things, and automotive technologies. Companies that are adept at navigating these trends and leveraging them for growth are the ones that will likely see the most success. As we conclude, remember, the world of investing is always evolving, and staying informed is key to making wise investment choices. We hope this deep dive into some of the leading companies in the semiconductor sector has provided you with valuable insights. If you found this video informative and enjoyed our analysis, please hit that like button, subscribe to Investify for more in-depth financial content, and don't forget to watch our latest video for more insights into the dynamic world of investing. Thank you for joining us at Investify, where we help you invest smarter. Until next time, keep analyzing and stay informed.